Welcome back everyone to another video. Today we will assess Bitcoin USDT on the Mexi chart. First things first, we can already see that there is a range. This range is forming because of consolidation. And consolidation is happening because it is Christmas. The December season is always a low volatile season. As traders go on holidays, they go off enjoying the Christmas season. Merry Christmas to everyone. And so we can see here already that there's a lot of flatness happening. We've got some consolidation there, consolidation here, consolidation right here too, there, a little bit there, and it's just everywhere. And that's ever since the season started. So we can see straight from December, even a little bit right over here, straight from December, as we can see over here, it started to consolidate. And yes, there have been more sudden movements, but it's been like erratic price action, I'd say. It doesn't make sense. Like we've had price pump and dump, price dump, price dump, price dump, and a major pump right over here. And it makes no sense. There's just a massive range that price is sitting in. And right now we're just looking at the lower time frame range of the 4-hour chart. So we're looking at a swing trader's perspective really, or yeah, swing trader's perspective. So with this one, we can identify that there are two liquidity zones, sorry. So whenever it comes to ranges, there will always be two zones above and another zone below. So I'll just highlight those. And these ones, it's basically where it's just above the previous high really. And another way we can confirm this is looking at CoinGlass. So for the lower liquidity zone, this is on CoinGlass's website. We can see that there's $40 million worth of liquidation leverage at 86.4k. And again, we can see from 85 all the way up to 86.4k, we've got our liquidity zone. And again, same thing applies for the liquidity zone above. We've got 56 million liquidation leverage, and that is at 90.6k. And again, this sits at 90.6k, the zone. Now, another way we can do to try and identify where price would go is using Fibonacci retracement. This is a fantastic tool. I love it. It's great. It always does the job. I like to use it on swing trades mainly, as on the low time frame it gets a bit noisy and it can't always be exact. So I prefer to use it on the 4-hour, 1-hour, and daily time frames. If you do want to know how to use this tool, I have added the link in my description of this video, featuring a 5-step guide that I have made. A lot of people enjoy it, a lot of people like it, and some people have found it very easy. So if you'd like to learn it, check out that below. So let's get started then. So we'll start off again with highlighting the low with the Fibonacci tool. So this one we'll do it all the way to the side so it's out of the way. And we want to do it all the way up to its previous high. So from the low of, let's see, the low is 84.4k all the way up to 90.5k, 90.6, sorry. And we can already see our golden pocket. Now this golden pocket is already about to be touched, it's just about to be hit. And now we do the same thing for the bearish golden pocket. Let me just adjust this. So again, the same thing from the high of outside of the range, 94.6k. We'll bring that all the way down to the lowest point, which is 84.4k. We can see our golden pocket lines up smack in the middle of our liquidity zone. So this acts as another confirmation, another confluence for our trade that price might want to sweep up again. However, this pump right over here has most likely done the job for us. This one right here. So that's terrible. So price has gone down, done its thing, and it made one more attempt to try and tag it. However, it rejected at the 0.5 node of the Fibonacci golden retracement. This option up above will not happen because it already made 2 more attempts, which it all failed. We can see there was a heavy push down again, and price didn't make its way above into the golden pocket or liquidity zone. So it's most likely going to sweep the below liquidity zone. So another way we can also confirm this is by looking at volume. So let me just get the volume ready. I want to use it from the start of the range, and we can see a majority of the volume is already where price is. But since price spent most of its time above the POC, this line right here is called POC, point of control. As price has spent most of its time above the point of control, it needs basically more time to refuel. And in order to do this, it needs to go below and sweep below, which is what's going to happen. Now, 85k, psychological levels. I love psychological levels because they're very effective and they always work well with swing trading. We can see price here was able to tag 85k perfectly. It had an open and close, equal open, equal close. Now with these ones, this acts as another liquidity zone, another psychological level in some way. It's right next to 84k, and it's just above 85k. The strongest psychological levels are ones that work in fives, such as 5, 10, 15, 20, 25, and so on. There are psychological levels such as even numbers, you got 84, 86, 88, and so on. So in this case, we can also highlight this as a secondary liquidity zone. This is where most people will be placing their orders, their stop losses, etc. because they see this equal close and open as a strong zone for, price won't go here because there was a strong reversal. So that is our second one. Right over here though, there's been plenty of liquidation sweeps, a lot of wicks and a lot of noise. Ideally, price doesn't want to go here. The only way for it to sweep is if it was to sweep, the level 94.6k, the previous high. But that would take a lot of momentum to pick up again. And with the saying, December pumpy, January dumpy, that's most likely not going to happen, especially with how much consolidation there is right over here. So in the short term, for the next couple of days, for the next week, how I see price going is I see it's going to drop all the way down to the discount zone of 0.786 on the Fibonacci golden retracement tool, and it's going to sweep the liquidity zone and the fair value gap at 86.167, smack in the center right over here, and then it's going to make its way back up, retest the golden pocket, and hopefully refill the zone 87.4, which is the 0.5 on the Fibonacci retracement tool. So that is my assessment for Bitcoin for the next couple of days, but do be careful when trading it because we are in the middle of the festive season as well as New Year's right around the corner. So price action may instead just consolidate and continue to flatline. So do be careful when trading. You don't want to get stuck in a trade on on New Year's Eve. Use proper risk management, make sure to stay disciplined and maintain proper psychology when trading. Best of luck to everyone. If you did enjoy this video and this short assessment, please make sure to, like, subscribe, do all the following gibberish, and yeah, I'll see you guys in the next one. Alright, thank you, take care.